Have you ever stopped to think how something like, say, rising tensions halfway across the world, how that could actually hit your Bitcoin holdings almost instantly? It seems kind of disconnected, right? But it's not. Today, we're doing a deep dive into exactly that, the surprising links between global events, market forces, and, well, the roller coaster that is crypto. And we're grounding this whole discussion in a really solid piece from Crypto News. It's called Bitcoin: Geopolitics, Market Dynamics, and Future Outlook. Really helps tie things together.
It absolutely does. And I think what's great about using this article is it pushes us beyond just what happened with the price. It helps us, and hopefully you, understand the why these things matter and how these different pieces, fit together.
Okay, so let's unpack this. And maybe start with the most immediate thing from the article. Bitcoin's recent price movement. It dropped, right?
Yeah, it did. The source points out it slipped below its 50-hour exponential moving average. That's a key short-term trend line for traders. Fell to around $105,552.
And the article connects this directly to the situation in the Middle East, specifically mentioning Israeli strikes on Iran.
Exactly. And this is where it gets really interesting when you look at the reaction. Because while gold, the traditional safe bet, was hitting new all-time highs.
Bitcoin went down.
Precisely. It dropped about 1.6% and acted much more like a risk-on asset. Think tech stocks, not digital gold, which honestly throws a bit of a wrench into that whole digital gold narrative, especially during serious geopolitical stress.
Right. We hear that all the time. So in a real crisis, investors maybe still see it differently, more speculative.
It seems that way based on this reaction. Like maybe it's seen as a growth asset for calmer seas or something people pull back from quickly when things get shaky, rather than a true flight to safety.
And it wasn't an isolated event just for Bitcoin, was it? The whole crypto space felt it.
Oh, absolutely. Billions just vanished from the total market cap. You saw major altcoins, Ethereum, Solana, XRP, they all took hits too. It really underscores how these geopolitical shocks can send ripples across the entire digital asset market.
Okay, this is where it gets really interesting, especially for anyone trying to, navigate these choppy waters. The technical analysis in the article, these numbers can be pretty crucial.
Yeah, they really can give you a map, so to speak. The article lays out some key levels people are watching. On the upside, resistance points around $106,671, then $107,790, and nearly $109,000. Bitcoin apparently failed to stay above that middle one, the $107,790 level.
Okay, so those are ceilings. What about floors? Where's the support?
Good question. The immediate support mentioned is $105,000. Below that, we got levels like $104,633 and $102,861. And then there's a much bigger, major support level way down near $95,000.
95,000.
Yeah.
Wow. Okay. What are the other indicators telling us right now?
Well, the price seems to be stuck in this pattern called a broadening wedge. Picture the price swings getting wider and wider usually means more volatility, more uncertainty. Plus, the MACD, that's a momentum indicator, it's looking negative.
But the RSI is neutral.
Yeah, the relative strength index is parked right at 50, kind of middling. And that 50-hour EMA we mentioned earlier, it's now acting as resistance, right around $106,671. So the technical picture is, well, it's mixed. There's tension there.
So if it breaks below that $105,000 support level.
The warning is, especially if it happens with a lot of selling volume, it could definitely test those lower supports, $104,633, or maybe even down towards $102,861.
It really brings up that practical question for you listening.
Yeah.
How do you even use these technical signals when things are so volatile?
Exactly. It's tough.
So factoring in the technicals, the geopolitics, what's the outlook? What are the potential paths forward for Bitcoin according to the source?
Well, it paints two pretty clear scenarios, really. The bearish one leans heavily on those geopolitical tensions. If things really escalate between Israel and Iran, the article suggests Bitcoin could be pushed below $100,000 pretty quickly.
And that $95,000 level becomes the next big focus then?
That seems to be the next major line in the sand, yes. It just shows how directly linked crypto prices are to global stability right now.
Okay, but what about the flip side? The bullish case.
The bullish scenario depends on two things happening together. First, geopolitical tensions need to cool off. That's key. And second, that institutional demand we've been seeing, especially through the ETFs, needs to stay strong.
Those ETF inflows have been massive.
They really have. If both those conditions hold calmer global scene, continued strong ETF buying, the article suggests Bitcoin could push back up to test that 108,992 resistance again. And if it breaks through that, maybe even head towards $112,000 or higher, signaling a more sustained bullish trend.
So it's like a tug of war between global fear and institutional appetite.
That's a great way to put it. These dual forces are really shaping the narrative.
Let's talk more about that institutional side. It's maybe less dramatic than missile strikes, but potentially just as impactful, right? That flow of big money.
Absolutely. It's like this quiet giant in the background. The article drops a pretty impressive statistic. Over $1.3 billion flowed into the U.S. pot Bitcoin ETFs just in the last week, reported.
1.3 billion in a week.
Yeah. And so what of that is huge. That level of demand provides a really strong underlying bid, a sort of cushion for the price. It could be the thing that helps stabilize Bitcoin if, and it's a big if, those geopolitical risks start to fade. It's a counterweight to all the volatility.
What's also fascinating, and the article touches on this too, is how the whole ecosystem around Bitcoin keeps evolving. It mentions a specific altcoin.
It does, yeah. Just as an example of other things happening in the space, it brings up the BTCBULL token, or BTCBULL.
What's unique about that one? What caught the author's eye?
A couple of things with its mechanics. It apparently plans BTC airdrops for holders, with priority for early pre-sale buyers. And it has this mechanism called supply burns, where they actually remove tokens from circulation whenever Bitcoin hits certain price milestones,
Yeah.
like going up $50,000. Creates scarcity.
Interesting. Scarcity mechanics are always a big theme.
Right. And it also offers staking features. The article mentions a 58% APY pool with no lockups, aiming for passive income even when the market's wild.
And where's that project at now, according to the source?
It mentions it's raised over $7.1 million towards an $8.2 million goal, with a price increase coming up soon. So it's just presented as one example of the innovation happening, linking back to Bitcoin but trying different models. Still early days for something like that, obviously.
Okay, so let's try and wrap this up. We've covered a lot: geopolitics, technical levels, institutional flows. What does this all mean for you trying to make sense of Bitcoin right now?
I think the main thread through it all, pulling from the article, is just how interconnected Bitcoin is now. Its price isn't just about code or adoption anymore. It's tightly woven into global events, traditional market sentiment, and crucially, that big institutional money.
We've definitely seen how fast things can shift based on headlines from overseas and how important those chart levels can be as indicators.
Exactly. And that echoes the article's main advice, really. Keep a close eye on both the geopolitical news and those key technical price levels. Understanding both is pretty crucial for navigating this market effectively. Knowledge is one thing, but applying it is key.
Okay, so here's a final thought for you to take away and maybe ponder. Given how Bitcoin acted here more like a risk-on tech stock than digital gold when things got tense, and considering its complex dance with both Wall Street money and global conflicts, how might its role be changing? Could it challenge, maybe even redefine, what we think of as a safe haven investment in this increasingly linked and honestly pretty unpredictable world? Something to think about.